who is eligible for a VA loan? Well, first of all, it's available to current and former members of the Air Force, Army, Marines, and Coast Guard, and surviving spouses. So what that breaks down to, the requirements are you have to have served active duty, 90 days in wartime, and over 181 days in peacetime. Veterans with the same qualifications I just mentioned, discharged under conditions other than dishonorable. So also 6 years of service in the Selected Reserve or National Guard, also honorably discharged. If you're a surviving spouse and you're unmarried of a veteran who died in service or because of a service-related disability, or if you're a spouse of an MIA or POW, or a surviving spouse who has remained unmarried until 57, you are also available for a VA loan. So it's not just one or two. There's a whole list there, okay? Requirements also include that you have to have a COE to verify your eligibility for a VA loan, and you have to have satisfactory credit, sufficient income, and a COE. So let's get into it. A COE is a certificate of eligibility, and that document is obtained from the VA, and it confirms your eligibility. That must be obtained on every single loan. So that can be obtained with the DD-214 discharge papers, and that's basically your service records or states your discharge from the armed forces and provides entitlement information. And that entitlement information is used to calculate your max amount for your loan. And it also contains information regarding your funding fee application or obligation as well. So there's a lot of information on that. Okay, so a funding fee, guys, is a one-time fee paid as a percentage of the loan amount. So based on your down payment and the type of service, you can be financed into the loan or paid in cash, and certain veterans are exempt. So if you have a service-connected disability, if you're a surviving spouse, a Gold Star spouse, or if you have active duty Purple Heart recipient, then you are exempt from paying this fee. You won't have to do that, okay? So it really breaks down into how much of a down payment you put down, as well as what percentage the funding fee is going to be. And I'm just going to go over first time use today. There are percentages for subsequent uses, but we're going to talk about first time today. So if you put down less than 5% on your down payment, it's a 2.15% fee for your funding fee. If you put down 5 to 10%, it's going to be 1.5, and if you put down over 10% on a down payment, it's going to be 1.25% of your loan amount will be the funding fee, okay? So you can put 0% down, but you will have a funding fee of 2.15% of your loan amount that you will have to pay when you close your loan, okay? So down payment can be 0%. If you choose to not have a down payment, you can still put a down payment down if you want to get a better rate and a lower mortgage. So you can do the 0%, or you can decide to put a little bit down and help that mortgage rate out. Now, there are reasons that you will have to pay a down payment with a VA loan. It's not always an option. If you do not have full entitlement, you have to put a down payment. Now, most of the time you'll have full entitlement, and here's the reasons why you will have full entitlement. If you have full entitlement, if you've never taken out a VA loan. So if you've never done one, you have full entitlement. Don't worry, okay? If you've paid a previous VA loan in full and you sold the property, you have full entitlement. If you've used a VA home loan benefit and your home was foreclosed on or short sold, and you paid back the VA in full, you have full entitlement. So you're good to go. Next would be if your VA loan amount is higher than the VA loan limit. Some borrowers face limits on what they can borrow. So if they're borrowing more than the limit, they will need a down payment. So the limit is a mathematical equation that we do, so we can tell you that as the loan officer, okay? If you only have partial entitlement. To get a VA loan, you must have entitlement. So most veterans and service members have a full entitlement, but if you have defaulted on a VA loan previously, you currently have a VA loan, or you still own a home that was paid for with a VA loan, you'll only have partial entitlement. If that home costs more than your entitlement amount, you will need to pay a down payment to cover the rest. So the VA does name what approved co-borrowers are in a VA loan. So a VA loan allows typically a max of 4 borrowers on the loan. For co-borrowing, this includes a veteran and a non-veteran spouse, 2 married veterans where they use 1 veteran's entitlement, 2 married veterans where each uses a portion of entitlement, and then 2 non-married veterans where both veterans use a portion of their entitlement. And it's not like the VA expressly prohibits non-spousal co-borrowers, otherwise known as a joint VA loan. It just, in those instances, the agency tells VA lenders that it'll only guarantee the eligible borrower's portion of the loan. And that leaves a chunk of the mortgage without the government backing that the program relies on. So That doesn't mean you can't secure a loan with your fiance or your significant other or your civilian neighbor, okay? You can do a joint VA loan. And they're for non-spouses or non-veteran co-borrowers. For example, if the veteran got a VA loan with their brother, parent, or an unmarried significant other, that's a joint VA loan. Joint VA loans are absolutely possible, but they look different than a regular VA loan. They're different because the VA's guarantee extends only to the veteran's portion of the loan, which is normally half in most cases. Most of the time, joint loans wind up requiring a down payment to account for the part the VA does not guarantee. The amount depends on a few factors, including entitlement and the home's price. There is just a few details about VA loans. I hope you learned something. Let me know down in the comments if there's something you want to know more about or something you want me to talk about next time.